Hey everybody, Gary with Basecamp Trading. Let's take a look at crude oil futures today. This morning when we came into the room, we were on this bar right here and we were talking about how crude on the 240-minute chart was bearish. The 5 and 13 had crossed to the downside and momentum was bearish, and we even mentioned that if we break below this previous price bar's low, we were going to trigger a bearish inflection, which is a bearish momentum setup. So we had a bearish 240-minute chart, so our bias was to the downside. The problem was initially on our 30-minute chart, we were not in confluence. We ran down just as we were coming in the morning, hit the 200, and then left this big bullish bar. The body of that bar was, or bottoming tail, and the body of that bar was all buying. Set up a doji that actually triggered as a continuation doji and even went higher. Now we ran into resistance at the 50 EMA, and you can see that was significant resistance all the way back into the London session. Popped above it, came back under it, popped above it again, couldn't stay above it, and then we actually broke back to the downside. 5 and 13 stayed to the downside, and then momentum shifted. So at this point, we are now in confluence with the 240-minute chart. We've gone from bullish to bearish. Our momentum shifted back to the downside, moving averages shifted back to the downside, and then crude proceeded to make a pretty nice move to the downside off of that. Pushed down, actually broke under the 200 EMA, came back, see, we tested it again. These major moving averages, the 200 and the 50 EMA, are significant support and resistance in these markets, and you can see we broke under it, closed under it, so nice negative close. But then we opened right here, came back, did a last kiss off the 200, and then made a nice rip lower off of that. Got way significantly undervalued, traded down into a couple targets, and now crude probably going to pull back and consolidate. You got really extended at this point. This is what that looked like on our Unorenco chart. Right here is where we initially broke down. We pulled back up to the 50 EMA, and then we triggered this support break line right here. Broke down, hit a target, made the pullback into our moving averages, got the momentum reset, VSI is below the 50, got the wick off the 34, made a nice move down. Our initial target was 72.20. The initial support break was below 72.68, and then our re-entry, which was good for $200 per contract on that initial break, and then our next entry was actually 72.54. Traded that down into 72.20, which was our first target, and then our bag number was down here at 71.20. Pulled back down. One bar pullback's not enough to stop me out. If it did, you had that wick off the 18. We're able to trade that back, pulled back, got the trail stop failure, double wick down into the bag number. So some really strong potential shorts in crude. In fact, crude continued to break lower after that. It's just we were already significantly undervalued on the 240s and the 30s at that point, so it wasn't trading that last move lower. But again, nice potential to catch at least $1,000 in crude today, maybe more depending on how you were trading it.